up, guys and girls? It's the Short Bear, and welcome to the Q&A. It's been a long time I wanted to do this, so let's get into it right away. Right, first question. Hey Lucas, saw your amazing trade on RBZ. I have a question that you stated you attacked when you saw the manipulators start selling. What is it you look for in a tape that tells you the manipulators are selling? And the second question, which is probably nearly exactly the same. So your RBZ short today around 253. It started working right away. You mentioned you saw something on level 2. Can you explain what you saw? Would love a tape reading level 2 video from you. Alright, so this is the trade on RBZ, and I'm gonna get into what I saw on the tape more in detail just after, because I want to make a really big point and tell you or show you what is the easiest way to spot something on level 2. But let me tell you exactly what I saw. So in the morning we had no volume whatsoever, as you can see right here, and we started grinding up. Alright, so we could draw a trend line right here. After that, once we broke out of the 220-ish, 230-ish line right here, we started doing some more volume, alright? So first push on bigger volume than before, next push bigger volume, and then right here, bigger volume. But when we started getting into this area at 250, we started seeing some bigger selling volume. So we started seeing some bigger selling volume right here, and we were starting to kind of grind higher. So we got some people absorbing in here, really holding this up, some bigger orders on the bid, holding it up. And once we got into this area right here, we started, as I just told you, to see some more selling pressure. And someone up here was doing something really specific. And that's what I'm going to talk about just after, so give me a few minutes as we come further into the video and talk about exactly that question. So if you haven't made the video yet, I am very curious to know why NET dropped $1 all of a sudden at 9:13 today and what we can do to avoid those drops. Thank you for taking our questions and making the video, much appreciated. No problem. So what we're going to talk about right now is how can you avoid those big dumps. All right, I'm talking about this one, I'm talking about this one, I'm talking about this one, and this one. There are a few things you can do to avoid those kind of dumps, especially if you're a long trader and you're thinking, right, this is heading higher. There are some red flags you can see. So first of all, if we are grinding higher and making higher highs and lower lows and a trend up, you don't want to see decreasing volume. So as you can see, we got this big rip in the morning, moving higher, bigger volume, everything's fine. And then once we start breaking out to new highs, the volume is just not there. It's like not even 1/2 of the previous volume. And we've got a pretty distinct trend line. So if you see a trend line and the trend line gets tested more often and more often on lower and lower and lower volume to push it up, and it's harder to push it up every single time, be super careful, because this is exactly when they dump it. Another thing that you should look at is huge orders. Alright, so huge orders on the bid and the ask starts to absorb. That's what we saw right in here, and then they dump. Same thing here, same thing here. So this is going to be a thing, and after that, after huge drops and heaviness, be careful on pops above resistance. So something that you might see as a breakout is actually a lower high on the bigger time frames, and this can be super dangerous to shorts, too long, I mean. So this one, for example, breaks over the resistance, but stops right away and gets crushed. Same thing here, breaks the resistance, maybe some longs get in and then they get dumped on right away. So careful on grinds and low volume, and be careful about big bids and the ask absorbing. Those are going to be the main things. You are going to be stuck in some of those from time to time. So yeah, be ready with your stops and so on, and you'll make it. Shouldn't be too hard of a problem. Right, so next one. What do you look for in the tape when you're looking for a short entry? Your tape reading skills are awesome. A few minutes would be great, so a small video. The third one is, how do you approach averaging up? Some folks have a max loss while others have a PT in mind. All right, so let's talk about the third question first. Pretty easy. I never average up. That's the easiest way to put it. So averaging up for me is the biggest recipe for disaster. Um, Averaging up, especially as a beginning trader, is going to get you in so much trouble you can't even imagine. I used to do it at the start of my trading career journey, and I blew up, I think, at least once because of it. At least once because of averaging up. I was thinking it's going to be pretty easy, it's going to come down at some point, blah, blah. And then all of a sudden, you're in pretty much your whole account, and it doesn't take much for a stock to really blow you out. So, I mean, we don't even need those DRYS moves. Some kind of stock moving to 100% or even 100% if you're using margin can easily blow you up. One big candle, one big rip. So that's what I always say. Don't average up. There's no reason why you should average up. The best trades work right away. Average down if you want to. What I mean is, don't blindly average down, but add to a winner and move your stop down. That way you have exactly the same dollar amount as a risk, but you're winning. Your wins are gonna get bigger. Don't average down on every single stock, but when you know your data and you know it's fading until 4 p.m. most of the time, when you know the average fade is 30% and you're at a 7% fade or something, there are some things you can do to really exponentially have better results while keeping the risk pretty tight. So you're going to work on your RR and not on your winning percentage. That's what I did last year, and let me tell you, it works really well with the adding. So pyramiding instead of adding because I wanted to add. So there's a real strategy behind it. So regarding the tape, now we're going to get into it. And for that, I've got this kind of diagram to really show you what I mean. So you might not understand what is drawn right here, but I'm going to tell you right away. So I don't want to short a stock that is trending, at least in a strong trend. So, or let's say for the sake of this video, I don't short trending stocks. What I mean and what I see on the tape and on level 2 is going to be the bids are stacked. They're not showing huge size. What they're doing is they're trying to accumulate as much shares. They're buying it up because of some kind of reason, but it's strong. So we've got bids. Let's say this is $10. So, or let's say this one is 9, or no. Let's say the top one is 10. This is 9.95, 9.90, 9.85, and those ones are 10, 10, 10, 20, 10, 25, 10, 40, something like this. So the ask is not as stacked as the bids. There's more space, there's more kind of inconsistencies where the sellers don't really know exactly where to sell. But the buyers know one thing, they want to buy. So they step up, they stay stacked, they move it, there's volume, there's news, and so on and so on. So I don't want to short something like that. But at the top of the trend, there's something pretty, I don't know, pretty epic that happens almost every single time if you really look at it. And what happens is the longs start to get inconsistent. So they might be a parabolic, they might be something, but it's not as stacked anymore. So let's say that this bid would be gone and the ask starts to come down. So they compress it basically. And at first the sellers were basically in kind of a range higher. So kind of spread across the ask, but now they're starting basically, so the bids start to buy it up, and then there's a certain point where the sellers start to compress. So they are in a small window basically, and that's what you see right here. So this would be the top. The bids start to thin up, and then what you see is some kind of huge bid showing. So let's say 400,000 shares, 200,000 shares, 100,000, depending on the stock and the volume. It just picture a really big number, and the ask just shows, let's say, 5,000 shares, and but he absorbed 30,000. He gets out of the way at some point, and we get into the next order, and this order shows 1,000 shares but absorbs 50,000. Something crazy. So I'm putting it in a pretty dramatic way, but you will see like a $10,000 shares order on the ask can absorb 50,000, 100,000, no problem when we have the right sellers. And once we see that, we move down. So the previous ask comes back down to the original price just above that order, and just picture it. So before we could push up no problem, but right now we can't even push up with the 200,000 shares order. When he gets taken out, all right, or he starts getting chipped away, I short as much as I can right there. That's gonna be my main shorting idea, main shorting spot. That's the best thing you can see, in my opinion. So most of the time this order is even gonna pull, all right, so you have maybe a few seconds to hit him, because he's not gonna let you fill everything, because usually this big order is actually part of the smaller orders, so the hidden orders on the ask, and they're just trying to scare you as a short into covering into them, basically to get them out of the shares. Next one. Do you ever short stocks that gap down on negative news? I used to, but I don't anymore. I'm seeing too much inconsistencies, and I'd rather focus on my main plays, the gap ups, and play them with more size than be kind of spread across multiple things where I'm not sure, and so on and so on. So, because the thing is, it's not only about having a ton of setups that you can play all the time. It's also about having a setup or playing your setup with size and conviction. If you're playing 10, 20 specific things, you won't be able to kind of really be super focused on something. So next one, what ECN rounds do you use, and how do you add liquidity? Or I mean, and do you add liquidity, take liquidity on your entries and exits? So this is something I'm working on currently, to add more liquidity. The thing is, as I just told you, from this example, it's just one of the many things I look at the tape. I just wanted to talk about it because I think it's it's the easiest thing to spot on the tape. I've got a few seconds to hit him, and usually you won't even get filled one share on the ask. All right, so that's why usually on entries it's hard to provide liquidity. So I take liquidity most of the time. I just hit the bids. But on my exits, definitely I'm looking to add liquidity. Sometimes it doesn't work because I'm seeing some kind of thing come up and I just want out right away, so I'm going to take liquidity. But other than that, I'm always looking to add liquidity if I can. The ECN route, I use the standard TZ Trade Zero route. I'm really happy with it. Do you mainly focus on the biggest gappers on the day, or will you take low-hanging fruits on stocks yapping less than 25% and give a clear red read reject, PM high slam, and so on? So, I do play low-hanging fruits, but I think there's kind of a misconception in our kind of field regarding low-hanging fruits. A low-hanging fruit for me is not a stock that is on the day 3 without volume whatsoever. That's not for me a low-hanging fruit. A low-hanging fruit is going to be, let's say a stock gaps up 400% and you've got one that gaps up 30%, something like that. Nobody's really watching it because we've got that 400% gapper. So this play is going to be easier, so that the one that doesn't gap up as much. Let's say this one, so the 30-40% gapper has dilution and so on. I'd rather look at that and have a non-crowded play than play the bigger stock. I am likely to be in a big stock as well, but I'm not gonna completely avoid the 40% gap up on the other one. Other than that, days 2 where we're trap shorts and rip through some kind of resistance area, that's going to be a play allowing food for me. But it's pretty much it. I mean, I'd rather focus on the more active stocks than the day 2s. All right. What factors made you become consistently profitable the quickest? Yeah, there's someone I want to give a shout out to. It's going to be Tim Gratani. He helped a lot with his spreadsheets back then when I wanted to build new ones. And yes, I mean, I started tracking and it changed everything. Everything where you might have emotions, where you're thinking, should I cover? Where should I cover? Is this a good spot? Is this too overextended? Should I take partials? Should I add here? Should I enter here? Every single one of those questions where you get emotional is completely data based for me. So I know exactly what the average high of day is, which is giving me a perfect point of entry for my short. I know which areas we're not likely to get over. I know which areas we are really likely to bounce to during the day, and I know exactly where the low of day is really likely to be in. So during which time period and exactly at which percent move down, so percentage fade from the open. So data is the answer for everything for me. It's the focus I have in my trading. I know traders that don't track a lot that are profitable, but usually I found out that the more tracking, the less emotional I am, the more size I can trade, the better my stats are. Actually, if you look at my trader view, it's pretty much exactly the same as my stats on my data sheets, on my spreadsheets, because I'm trading my data, I'm trading the actual setups, I'm not trading my emotions. What's your most profitable setup with entry, risk level, and exit? It's going to be the gap and crab for sure. So a gapper, a big gapper with dilution. I'm up at 7 a.m. every single day. I mean, before that, but at 7 a.m. I'm ready to trade. At 7:01 I can take a trade. So I'm looking at the fundamentals. I'm looking exactly which kind of dilution they have. If it's hidden, it's even better. If there's fake news too or recycled news, super nice. And yeah, I take it down for a nice profit if I can. What fundamentals do you like to see before taking a position on the ticker? ATM, convertible notes, warrants, no cash whatsoever. Those are the main things I think everybody knows about, and yeah, that are super important for me as well. Does your approach and strategy change when trading larger cap stocks? Of course, 100%. It's completely something else. Um, with with larger cap stocks, I'm assuming we mean something like Tesla, Netflix, Apple, Amazon, something like that, right? There's the winning rate on those is far smaller than in the small cap land. All right, the inconsistencies in the market are not as big on big caps as on small caps, but that can be changed. So a lower winning rate is not bad. All right, it's not bad if your average RR is bigger than on small caps. So that makes up for it. And yeah, usually larger cap stocks, lower winning rate, and a really nice risk reward. That's what you want to aim for. It's not really so, and usually on larger cap stocks, I only trade them if there's a specific event. So a big gap up, something specific news. So when the market is emotional, when the players are emotional and something unusual happens, that's when you want to take advantage of the market. And you don't take advantage of emotional traders by being emotional yourself. It's you take the advantage of it by being data focused. How have you gotten into trading? Pretty easy. I moved from France to Germany when I was younger. It was not easy to get or to find new friends just based on the fact that I didn't know the language as well as the other kids. And I thought, you know what? I'm just gonna focus on living my life, and I'm gonna start to build it. I always knew that I wanted to make some kind of money, but the most important thing for me was complete freedom because I hated school. So what I did is I learned about, and so I typed in quickest way to make money, and as you can figure, I found out about trading and started trading, and it wasn't as easy as that. But then some small parts of my trading, even back then when I started, I that there were some moments where I knew what I was doing. I had a plan and it worked, and I knew it's possible, right? If even 5% or even 1% is making it, and they're making a lot of money, why can't I? You know, why can't I? It needs to be it. I knew I needed to make it. How many entries do you use to get in full size? How do you scale in and out of positions? Um, so usually you will see only one entry. So let's say if a stock moves up, you're going to see one entry and I'm going to stop out. But if the stock moves up, I get an entry and it moves down. My full size isn't it's flexible. So if it started moving 400% to the upside, so gapping up, and we get super nice dilution, and I know they couldn't possibly get all that dilution diluted today, um, there's really no point where I would say there's something like too much size. I mean, there's too much size depending on the liquidity. But other than that, or I mean, there's not something like too many entries, at least too much size, yeah, liquidity and so on and so on. But if the stock moves down and I get some really nice resistance areas, I'm gonna add and move my stop as often as I can to get the most size out of it. So my risk is pretty much exactly the same, plus minus the slippage. But other than that, it's pretty much the best way to get huge winners while keeping your risk tight. Um, Scaling out of positions is a thing that is different though. So I have stats, and let's say a stock is really likely to hit VWAP or to retest VWAP after 10 a.m. But at the same time, we've got a 60% winning rate for a lower low after, so a lower low of day after 12 so 12 or let's say 1. And what I want to do if I know the stock is likely to bounce, but at the same time we're likely to have a lower low of day is I'm gonna maybe get out one half and play the bounce. So the bounce I'm gonna not add, but until VWAP or that specific area I want to add it, and I'm gonna add back and take it down all the way to the new low of day. So that way I've got the first fade and I've got the second one from VWAP or that area until the low of day. So I've got twice the profit. Or not twice, but I mean, could be twice, but you get the idea, so a bigger one. How do you develop the patience to hold for a trade for hours? I'm very anxious with winners. As I said, data, data, data. Um, my data tells me that on average, the stocks that I trade fade for 4 hours or more. There's no reason for me to exit before that. You will get stopped out. The winning rate is not 100%. But if you know 75% is fading for 4 hours or more from the high of day, there's really no reason to exit it after 20 minutes for me. All right, that's going to be pretty much the answer. I mean, it's pretty straightforward, just data. If the average low of day is lower, I'm 100% gonna hold. How do you gather data to backtest your setups? Well, it's pretty easy. Every single day after the trading day, I look at what moved. So it can be something with abnormal volume, bigger range than usual, bigger fade than usual, dump, gap up, gap down, or parabolic move. So those are going to be the things. I'm writing them down, and to the right of that Excel sheet, so the next column, I'm going to put down exactly which kind of pattern that is. I've got right around 7 to 10 patterns. And yeah, I'm gonna track those on specific Excel sheets, for those specifics, for those specific strategies. What puts a stock on your radar? Pretty easy. I want a stock that is up 5%, and I want a minimum volume of 15K. This is my first scanner. It's the thing. So usually we don't get basically anything at 7 a.m. But the first stocks that really spike and that get the huge gap ups, they usually put in a pretty big candle, with at least a few thousand shares or something. And it's not about every single stock that gets on the list is automatically a play that I can play, but I want to see that play as fast as I can. All right, and that is why I've got it on the radar. But if you mean it that way, what puts it on your radar as what makes it a potential short for you, and what might get you in, what are basically the parameters you want to see? I want to see 5K per minute minimum. All right, because other than that, it's going to be pretty hard to get in. I want a pretty tight spread of, let's say, a maximum of 5 to 7 cents. Um, I want a big gap up over 30%, and yeah, that's gonna be pretty much it. After that, it's checking the filings and the technicals to get an entry. What has been the main reason you've seen a sharp trend reverse besides news? Short squeezes. I think that's gonna be the most common thing we will see. So something is easy to borrow. Everyone and their grandmothers are shorting the stock, and all of a sudden manipulators step in, get some volume pumping in there, and yeah, absolutely starts ripping. That's going to be the first thing. I mean, other than that, there's probably not much. I mean, of course, big buyers stepping in or something like that. But yeah, so buyers or a short squeeze, or news. Those are going to be the three main things, I think. I'm probably missing something on this one. I'm not sure if there's anything else that would cause a big. I mean, yeah, fundamentally, something like, let's say, an offering, something like that drops midday, of course, 50% down, that's going to be a thing. Um, so, do you trade options? No, but I'm working on it. So, I'm not going to say more than that, but I'm working on some really, really, really cool stuff with a few guys that you should know as well. And yeah, I'm preparing to move more into options, especially for the big caps. Um, I want to be able to play them with the options, and especially as my size gets bigger and bigger, I want to be able to have some options to hedge my positions if needed. Do you look at what do you look at for pre-market trading specifically? What exactly do you look for entries during pre-market? Indicators you have when you determine support and resistance? How exactly do you draw the lines? All right, so it's pretty easy. All right, everything that either goes parabolic on volume and puts in a high, that's going to be a line for me, and the lines are just horizontal support and resistance lines. It's nothing more or less than that. So you've got that, and the other lines I want to draw would be some kind of range, so a price gets tested multiple times. Other than that, there's not much I want to draw on my chart because I wanted to keep it as clean as possible. Other than that, my entries are based on my data. All right, so the average gap up, the average move pre-market, and after that, when it gets to my target area where I want to short, it's going to be based on the tape. how much cents away is your stop? For example, $5 stock with 10K size. How much wiggle room will you give it to go against you till you finally stopped out? It's complicated, right? This question has one big problem, I think, and it's that it doesn't really involve the volatility of the stock, the volume of the stock, the float of the stock, and that's going to be a big problem to answer this kind of question. Um, there's nothing for me, so there. I mean, I'm hearing about a lot of traders that seem to think that putting in a dollar amount, so a fixed amount of cents to stop out is a good idea, but I really don't think it is. So some traders seem to think, let's say their standard share size is 10,000 shares, they get in, and no matter which stock, no matter the float, no matter where the resistance is, they're going to use 20 cents as a stop, for example. All right, $2,000, and that's done. But I don't think that's a good idea at all. So what I do is my size varies depending on the next resistance area, and I'm gonna risk off that area. I've got a specific number in mind. I don't want to cross regarding my max dollar loss, um, but it's all based on the chart. All right. But if it gets to that resistance area, I'm out 100% right away. There's no questions asked. It doesn't matter how it looks. If it just stops me out and then crashes a dollar 50%, I don't care. All right, you need to protect your account no matter what. If you get into the wrong stock and you don't get out, it might be your last trade ever. So mindful of that, please. And yeah, that's gonna be it. If you haven't watched the Q&A from Max, aka Mattes, please do. It's on mattesmoney.com or on YouTube, on his YouTube channel. And yeah, I hope to see you in the next video or in chat. And I'll see you in the next one.